Hey guys, Steve here with the strategy session for August 6th, 2014, Wednesday night. I hope you guys are making it through the week. 2 more days of trading left. Hopefully they'll be a little more exciting than what today was. Really not much going on, not a lot of oomph in the market. You could see really on the chart here, we basically closed unchanged. We were about 2 points up for today, but really just at yesterday's low. But again, up 2 points for the day. If we were going to bounce, I would like to see something obviously more impressive than this. Really just doesn't feel convincing to me. I kind of tweeted that, I think, right before lunch, that the bounce, it didn't feel like at one point, I think we were up 8 points, and it didn't feel that way, at least not for my positions and not for what I was looking at. And as far as what we have in the model portfolio, we're up a little bit today. Again, not much, nothing to write home about. Just another day of grinding action. And a joke that me and actually David Blair, Crosshairs Trader, has is he's kind of been alternating red, green, and today we exchanged a few tweets that he was right. Obviously, that was green, and now he called tomorrow to be red. So maybe he's wrong, maybe he's not. Maybe he's got a crystal ball. I'm not sure. But with that said, really we're trying to hold on to this level in here, this 1920 to 1900 level. Again, today we came right down to the low today was 1903. Again, with this kind of action, I mean, yes, you can consider this to be consolidation. Maybe we're putting in a lower box, something like that. But we have to watch these new trend lines that are developing. As far as, we obviously broke the uptrend line that we had. So this could move sideways and then bounce off this trend line. And then that market would actually be a short at that point. Because we would have this trend line, a break below, with a little bit more consolidation, obviously. A break below and a close below this 1915 level. You can actually short the market and put your stop right off here at 1930. I'm not too big on shorting, but it's something that some people do like to do. I'm typically long only. But anyway, so S&P 500, I'm just moving lower. A couple more days of this, and the 50-day moving average is going to start to round over and then actually become resistance for us. With the NQs, again, I tweeted late in the day that this was desperately trying to hold on to that 50-day moving average. You could see these tails coming in, right through here. I'll draw another rectangle just to highlight it. But I mean, the tails that are happening right in this area, 1, 2, 3, 4, 5 tails. So obviously this level, this 3840 to 3830, that's extremely important. So once we break this 50-day, there's really not support that I see until we get to 3800. And the same with the Dow. I mean, the Dow was up 29 points today, but it didn't feel that way. We're still moving lower. This one actually has been, look at the closes, lower, a little higher, lower. Every day it's a lower close. So again, not a lot going on. We're coming into some support right here on the Dow. That's the only difference. So this one is obviously corrected the most. But if you look here at this 16,265 level, we're kind of bouncing off of that, which was this previous consolidation. So let's see how how we react. Maybe we can get a nice bounce. I do think we're kind of getting into oversold territory, that we're going to be due for not a significant bounce, but a bounce. Where that goes, I'm not sure. But as I said, I do feel that right now, caution to the downside as far as I'm concerned. As far as our positions go, we're going to run through these real quick because honestly, not a lot changed from yesterday. Apple, really just consolidating, sitting above that trend line, sitting above the 50-day moving average. And right now our stop is 93. And actually, I did go this afternoon and update all our stops in the model portfolio, so that was adjusted. I'm sorry, I haven't been keeping up on that. We've been discussing them in the videos, but as far as me actually entering it into the spreadsheet, that was my fault, and I'll try and do better as we move on. You know, the ADM, again, another tail, another, maybe double top, whatever. But we put in another tail at this 49 level. Maybe we're going to now kind of take some time, fill this gap, roll back over. But, a couple more days higher, and we can actually maybe move stop up to 46.30. I actually did move a stop today in this. We're at 46. So that's this previous low in here, because right now the 50-day moving average is starting to surpass that. And if we draw, maybe this new trend line in here is kind of what I'm going off of for now. So as I said, 46. I'm trying to kind of tighten up stops where possible in case we do get a more of a sell-off than what we've had. AMT, again, still consolidating. We talked about this yesterday. Really just moving sideways in this body. Okay, so again, my intention or my thoughts are this is going to move sideways and come back into this trend line, allow this gap and all these buyers to be kind of, all that volume to be chewed up. And then, hopefully at that point we get a little bit of a market turnaround, we get a breakout higher, and then we can move our stop up. APD down 0.26% today. Again, still in that consolidating kind of phase, moving sideways. Right now our stop is still, our initial stop is 126.92. Eventually, maybe a few more days, I would like to move it to 128.70, which would be this previous low here. But I want to wait for the 50-day moving average to surpass that. EQR, really just coming back into trend line, 50-day moving average. Stop still is 63.16. So let's see what happens when we come back into this area. Obviously this trend line is broken, so let's take that off. Give us a little bit of a better idea of what we're doing. But, again, the last 4 days has just been consolidating. Sideways movement. Expedia came back, tested this little breakout, closed a little higher than the open, but lower than yesterday. And I'm going to do this actually next week on the trade school video. Is going to be a brief introduction to candlestick charts. So definitely make sure you check that out. That'll be next, Monday's the Outlook. Tuesday will be trade school days. So that will be an intro to candlestick charts, so you could see exactly how you look at these if you typically don't use them. But Expedia, again, here's our trend line. Right now, stop is 77.42, and again, on a little bit more upside and a couple more days that pass, I'm hoping to move that stop to 79.45, 79.50. And again, waiting for the 50-day moving average to surpass that level. Fidelity, this one's close to hitting our stop. All right, let's take a little bit more of a look at this one. Here's our stop level, 54.71, which is the bottom of this small consolidation in here. All right, so we're kind of close to that. We're breaking the trend line. We broke the 50-day moving average today, so the only thing left in our way of exit is this consolidation level. So 54.71, obviously that was a trail up from our initial stop at 53.66. So hopefully if we do get stopped out, we would actually take less than a 1R loss, because to be honest, those 3 losses last week were a little bit of a killer to the portfolio and to the performance. But really no way around it with the earnings gaps and everything like that. So right now, this is the closest position to being stopped out, and again, 54.70 is our stop. Close below that we're looking for. And last one is Wyndham. So Wyndham, I'm considering this to be one big consolidation. Stop is still here at 75, basically, which is this low here. And it was retested again on the 1st, which was Friday. So here was a retest of the 50. We're still sitting right above that 50, so we really need to see a breakout, I would say over 77, is really what we want to see. But I'm looking at this potentially being a mini head and shoulders pattern where we come up, here's a high, here's the head, which is another high, and then kind of this little, shoulder here, which will be a lower high, and then a break of 75.13. And again, that was the trailing stop was moved, and it's almost essentially we entered really right here, I think 75.81. So if we had a break at 75, again, as long as it's not a huge gap down, it's not going to be a 1R loss. And that's the whole idea of the trend following game. We're going to have more losses than wins, but the losses need to be small, and that's the only way you're going to get ahead. So like I said, the 3 1R losses or greater that we had last week, again, looking back, I don't think there's anything we could have done differently. It's just the nature of the beast, and but we need a little luck on our side as well. Let's take a quick look at these few that we looked at the other day. Hess, really, I still like this pattern. I think it's setting up well. I really want to see that break over 150 or 100.50. So, but again, it's a great looking setup. I think our stop would probably sit here at 96.50, and we would have probably like a $6 or $7 loss or risk per share. But again, you could see how it's been trending higher, coming into trend line support. Almost looks like UMP did last week. So we all know how that worked out for us. It didn't. We never got the trade. But again, trend line higher, coming into support, and then, of course, broke down. All right, so this was definitely a false breakout. I'm glad that earnings, that 2-week earnings rule kept us out of that, because we probably would have taken the trade on this breakout. And, of course, we would have been stopped out for a full loss. But again, the rules are there for a reason. Sometimes it sucks when they trigger and, like a Facebook type of thing where it triggered and then Facebook's $10, $15 higher. But it also keeps you protected. So again, Disney, same kind of setup, trending higher. I thought we were maybe going to get a breakout today, but now it looks like we've had these 1, 2, 3 bars here that basically are almost exact. Let's see. We have 87.61, 87.63, 87.62. All right, so that 87.60, there's a lot of sellers sitting there. So we would need to see a break over that 87.60 to consider getting into this. Again, like the setup, stop would probably sit right here at 85.04. Actually, this is one that I am long in my personal accounts that I'm looking to add to. But again, 87.60 really needs to break. Western Digital, again, this is another one that's setting up well, sitting right at the top of this consolidation. Trend line higher. I think what's happening here is we might get some more sideways, because look at how far away from the 50-day moving average it is. The best case scenario here is it moves sideways for another few weeks, lets this 50-day moving average catch up, and then bounces off of that. But again, look at the weekly chart. It's a great looking setup, right? We had this nice breakout from this weekly consolidation. Now we're putting in a small daily consolidation, move higher. Stop would be right here, 97.97. All right, if you want to be a little bit more conservative, you could probably drop it down to this 93.50. But it all depends on when it breaks, if it breaks out, and where this 50-day moving average is. Because like I said, I would always like to include a previous swing low, consolidation support, trend line support, and 50-day moving average. So those three are really the trigger that I use on where to set my stops. Marriott, this one looked great yesterday. Now it looks like it's putting in maybe a little bit of a lower high. A lower high. So, again, maybe this is something that is going to break soon. But until it does, it's a good looking setup. Right? Maybe this is kind of doing something like that. But like I said, right now it's still above the 50. It's above, actually did break this trend line, but it's still above this 63.40. So if we can get a push over 66.85, stop would be 63.50. And I think that's a great trade to take. Again, it's all conducive on what happens with the market. As much as, we don't go off of the market's obviously going to move our stocks around. So, and this is another one that I identified yesterday. I kind of basically just said, let's keep an eye on this, because the fact is that this was up yesterday when a lot of other stuff was down, and a lot of other energy stocks in particular were down. So I'm looking at this consolidation. Again, a break over 62. I think stop can go right here at 57, or depending on, it's tough because we don't really have a trend line to go gauge off of. Maybe this is the trend line that we need to go by. But, so then if that's the case, we could set our stop at 59 or 57.25. But again, let's see how it breaks out. If it breaks out, and let's see what happens, because we have some other work to do. The stock may have some other work to do before it does that. Maybe it consolidates a little bit longer. But again, look at the weekly. We're pushing right up against resistance all the way back to, let's see, this is 2013. So May of 2013 is the all-time high. So that's kind of what we're pushing against right now. So let's see where that takes us. That's really it for tonight, guys. I mean, like I said, not much going on, not much to do. We raised some stops to kind of take some risk off the table. I think at this point it's really just let's trade the plan that we have, but until we see some definitive market participation, I think you got to play these close to the vest. Maybe consider taking risk down. Maybe instead of risking a full percent or 0.75%, maybe go smaller size. That's all up to what you guys are trading, how you're trading. For me, I kind of trade the same all the time. That's maybe a downfall, and at the same time as I don't really let the market dictate how I trade. So if I see a setup like we saw in Expedia earlier this week, I'm going to take it, and it's going to be full size, because the fact is, for me, I don't know which one of these is going to turn out to be the winner. So I don't want to take half size and that be the one that turns out to be a 30% gain, and miss out on those gains. Especially if I can keep my losses small, I'm perfectly okay with taking full size positions, even when the market isn't participating with us. So with that said, tomorrow morning will be Anatomy of the Trade. I'm going to go over the trade we had in Amazon for anyone who doesn't follow the strategy sessions. So you guys have probably seen that, but good to see it from start to finish. There'll be a strategy session tomorrow night. Then we'll have our Friday, and then weekend update on Saturday. So make sure you give me a follow on Twitter, StockTwits, Google+, subscribe to the YouTube channel, and then also, if this is the first time you're seeing this video, I do offer a nightly recap. If you go to the website, www.theturtlefollower.com, you can sign up for the nightly recap in the top orange bar and get all these videos delivered directly to your inbox. So with that said, guys, have a great rest of the night, and we'll see you tomorrow.